Welcome to another episode of the Weekly Crypto Check-In, recorded on May the 8th, 2024. I'm your host, Robert Swarthout, and I'm joined by my co-host, Andres Sandate. How's it going, Andres?
Good. Good to see you again, Robert. Hope you're well.
I'm doing good. Just lots of time in front of the computer today. So,
yeah, definitely. What do you make of what's happening in the crypto markets over the last week?
I kind of alluded to it last week when we chatted, but just more of it's a bit of time of reset. You can get things done, but it's not as much so focused on the price action as other things that may be going on in the space to give, I guess, a breather. And it's certainly a healthy thing. If you look at technicals, it is something that needs to happen from time to time to allow them to reset. And, admittedly, April was a down month for the market. So a reset, maybe a breather that allows kind of maybe cooler heads to prevail. And we'll kind of get to a little bit more of the data about how the market might be going a little bit later in the episode. So,
sure.
Yeah, so we got the first thing here is Coinbase post Q1 revenue beat. Coinbase it's so funny. Like I find it entertaining because the data is always there for this business before they get to report. I mean, yes, they're trying to develop other lines of business, right? They're custody and all the other things. But but Coinbase is in like many other exchanges, their revenue comes from trading volume. Well, when the prices are up, or that means more people are trading. That means they're going to have higher revenue. It's just direct correlation. So it's just when you see these articles, like, oh, Coinbase beat. Well, yeah, I could have told you 2 days ago if you asked me to look at the data. If I thought they were going to be in line or whatever. So it's different than the average stock because most people don't have that kind of access to a stock, and obviously the quiet period and everything that goes into publicly traded companies.
Yeah, I thought that the headline was interesting just because they are kind of the bellwether or one of the bellwethers as far as the space is concerned. So I'm just curious if the public ownership of companies like Coinbase and MicroStrategy and others are how some of the institutions are thinking about the space as far as getting exposure, or if it's through, venture, or if it's through, trading strategies. I just thought it was worth a headline.
Yeah, absolutely. What's interesting is I didn't read the article, but I saw an article headline come across that Kathy Wood and ARK Investment is selling some of their Coinbase the last couple of days, $15 million yesterday. And I think that was like their second or third day in a row of selling. So it's, obviously they have a reason for what they're doing, but it's just, it's early in the cycle, in my opinion, obviously not financial wise, but it's early in the cycle to be selling Coinbase. Like if you believe that we're in a bull market cycle, and prices are going to whatever they're going to go to, market cap's going to go up 2x or whatever number you want to slap on it. It seems rather early to be selling the single opportunity you have in the equities market to be indexed to this. So we'll see.
Yeah. I'd love to dig in and understand who are the analysts covering Coinbase and what the institutional ownership is of the stock. I haven't had a chance to do that, but be curious if it's the big ETFs, like the big index ETF providers like BlackRock and Vanguard, or who the institutional owners are. But yeah.
I mean, so on the topic of institutional, it kind of leads us to our next topic of BlackRock leads a $47 million strategic investment in Securitize. Do you want to maybe give listeners a little quick recap of what you think Securitize is in 30 seconds?
Yeah, I think they're a platform for issuers and sponsors who want to bring offerings to the marketplace. And the marketplace could be accredited investors, qualified clients, qualified purchasers, but they're a platform that can facilitate, is the word I would use, the creation of tokenized offerings and other digital offerings. And so I see them as a platform that's going to help to bridge the TradFi space with
Mhm.
the investor that wants to get access to digital versions of those offerings or tokenized versions of those offerings.
Absolutely. And it's in some ways it's BlackRock following through on what Larry said that was going to happen from early
Yeah.
January, right? When Bitcoin's launch, he said tokenization is going to be the thing that's coming next, and it's coming next, and it's coming quickly. What I couldn't find when I was kind of researching this particular point was, of that 47 million, how much was BlackRock's stake? I didn't get a chance to kind of find that answer, but nonetheless, I imagine the securitized company executives are thrilled to have such a big name, kind of a stamp of approval on their offering or their suite of solutions. So
Yeah, it doesn't sound like BlackRock was the lead of the round. That would have been likely the headline that BlackRock
okay.
led a round in Securitize.
Uh,
If they led the round, I would think absolutely unequivocally that yes, your statement is Larry Fink is following through because he went out and led a round, and who knows, maybe they made
uh,
even an offer to acquire the company. I'd be curious. I'm sure we could find that
well,
data out, like who led the round.
well, I'm looking at the article here. It's from the block. It literally reads BlackRock leads $47 million
Oh,
strategic funding. So I guess it depends on how you define leads. I guess it could go either way there.
yeah.
BlackRock's name may lead it, or their dollars may lead it. But nonetheless, it
Well, I mean, if they are the lead, in fact, then that is a big stamp of approval. I mean, I actually interviewed with Securitize some time back, and they were looking for folks that had a background in traditional alternative investments and specifically wanted people that could distribute their offerings to high net worth investors, family offices, RIAs, and institutions. And when you look into the company, from what I can tell, they have one offering from KKR. I believe that they've partnered up with KKR on an offering. And
Mhm.
maybe this is the door opener to them doing more offerings. I think one of the things with Securitize is, can they get issuers and sponsors of call it traditional alternative investment offerings? And maybe they're not limited to alternative investment offerings, but can they get those issuers and sponsors to work with them to create these
Mhm.
blockchain tokenized, whatever you want to
Mhm.
characterize it? Can they get them to work with them on tokenizing offerings is going to be, to me, a really interesting data point. I'm sure that Securitize can do other things,
Sure.
but I see them as a company that wants to be very active in that space.
Yeah, and I don't know if what I'm about to say is true, but my hunch is that BlackRock also has the ticker Buidl, so it's BUIDL. That is the tokenized
Hmm.
treasuries, I believe. And I'm wondering if they use Securitize for that offering, but I have never seen something that specifically states that. So it's early days, but progress nonetheless. So.
Yeah, yeah, for sure.
So on the topic of tokenization, this is just a quick little, I guess, chat on this piece, but like tokenized diamonds are now available via a company called Timons with a T via the XRP ledger. It's you think of it as like a digital representation, like in an NFT form, and you probably the serial number or whatever kind of marking that they have on the diamond. It's interesting use case. I can't say I saw this I can't see this being a huge market, but I think this is an example of what will end up being thousands of things that end up tokenized someday, and this is maybe the first kind of off ball here.
Yeah, I'm just curious. The headline does get my attention because I'm curious about how that happens. Like, how
Right.
do they actually? I know that there's technology with respect to minerals and diamonds and
Mhm.
other natural resources. Theoretically, you could do this with any kind of gemstone. You could do this with any type of
Absolutely.
valuable, right? And so I know that the technology is far ahead of even my mind and comprehension. But I'm curious, like how
Mhm.
they practically tokenize it. I get the technology on the back end, but yeah, it's fascinating and a sign of probably more things to come as the physical and the digital converge.
Yeah, it's kind of slightly off topic here, but I was driving around the area here in Atlanta yesterday, and I saw a new store pop up that was for trading cards. I like wanted
Yeah.
to check the calendar and figure out what year it was, and then it got me thinking. I was like, oh, because they also said they did video games in the same store. I'm like, okay, you might have a world where you can go in and buy the NFT of the card that has been verified by whatever verification agency there is. And we're probably not far away from that, especially if you can, get tokenized diamonds. So, if you want to be able to show I guess your shoebox, virtual shoebox of sorts of cards you have with your shoebox of virtual diamonds, maybe. So
Yeah, I'm hoping our mutual friend, a shout out to Greg Kaufman, who is at Gridline and also is the president of the Kaya chapter in Atlanta. He's actually working on an event where the topic is collectibles, sneakers, sports cards, and other types of trading cards, because they are growing in popularity. And it's interesting because those stores that you mentioned, there's a new one that did pop up. The one that I'm thinking of is over off of Cobb Parkway in 41.
Okay.
And the space that they took out is in a pretty prominent shopping center, meaning the rent is not probably cheap. And the size of the store, it's so big that this is not the mom and pop trading card shop.
We're talking about the same one.
Okay.
And I was like, what?
Yeah. So my friend and his son went into that shop a month or two ago, and he goes, yeah, that's for big time collectors. That's not a place where like a 9 or 10-year-old's taking in like a stack of cards and they're like looking at them and saying, yeah, we'll buy these and we want no, this is for like the serious collector. So they have cards in there that go for thousands of dollars. And what I'm interested in is seeing where the trading card business goes as you look at all these different trading cards companies. And it used to just be limited to sports cards, but now my kids collect, they collect Pokemon and almost you start looking at the entertainment side of this and Marvel and what they're creating. And it's pretty fascinating to think about how big that market could get.
Yeah.
And there's some hardcore collectors out there, is all I'll say.
Absolutely. If you're into collecting cards, the next time you're on a Delta flight, you need to ask the pilot for a trading card. They have cards for each airframe that they fly these days, and maybe get them to sign it. Something a little bit different. They're almost hologramic type cards, but they one for each one. There's a lot of different planes that they fly, so different cards. So
cool.
So next topic, the SEC has filed their reply to Ripple's response, which for summary judgment, which was a rebuttal to the SEC's request for summary judgment. So we're kind of a couple layers deep here.
You have to say that again 3 times.
Yeah, and faster each time.
So the SEC filed a reply to Ripple's response.
Yes. Ripple's was much longer. The SEC's was shorter. At the end of the day, the SEC is, on one, obviously skewed to one side away from Ripple, and the burden in some sense is on the SEC at this point. They're obviously the plaintiff and Ripple's the defendant, but the judge has been seeing through over the course of this whole case, kind of the SEC's games. The SEC is trying to drag in some old dirt and different things that it's just more of the same. I can't wait to not have to talk about this anymore. But it's a sad state of affairs. And I say the same thing every time we talk about this, but it's at the end of the day, it's news. I think that the one thing that was interesting about the SEC's reply was they brought up that as of April the 4th, Ripple has decided that they want to offer a non-registered security in a stablecoin. So they're already starting to do the word games and pick the fight there that they hadn't even finished this fight. So it's just like, it's almost like they feel like they need to fill the paper with words and they just find some words to stick on the paper.
Yeah.
Anyways.
Well, like we talked about, over the last few months on the show, the regulatory environment, it seems this does one thing is it keeps a lot of lawyers paid very well.
Yes.
And if this industry is like almost every other industry, I think we're going to look at where these players are on the legal side of this and then the regulatory side of this. And it does feel like a lot of times the regulatory uh, experts move, once a big case is finished or once a big administration change takes place. You see a lot of the folks leave the regulatory world and go over, and sit on the other side of the table. And this case and many others
Mhm.
uh, continue to, uh, I think, slow down. I guess is the word.
Right.
What we all in crypto and digital asset space who are fans and who are investors and are followers is progress and clarity is I think is what we all seek. And regulatory environment here, as you've said, Robert, multiple times, that uncertainty and a lack of clarity, it's just allowing other countries to get ahead. So
Yeah. Yeah, it's and ironically, what the SEC is requesting is a permanent injunction, not just a temporary injunction, a permanent injunction against Ripple selling XRP to US-based businesses, accredited investors, not just like the random Joe Schmo in the public, which would, ironically, if they're successful in this, it'd be not great for Ripple, but also it would give the rest of the world a permanent head start. It just blows my mind. Like, what is the strategy here besides just like trying to get it all to go away? But it's not going to happen. It's going to go all the way in the United States if the SEC got their way, but the rest of the world's going to kind of continue on with what they think is right. So, anyways, so our last topic for this show is on-chain data is suggesting a bullish reversal. So the April, like I mentioned earlier in the show, was a negative down month, down 20-ish%. I often joke with friends. They're like, oh, some of them have been buying these Bitcoin ETFs, and they're like, oh, it's down 5% or 7%. I'm like, wake me up when it's down 20%. I don't really care about the 5%. Like, you haven't been in crypto long enough if you're worried about the 5%.
right.
And, it's so April was down. The signs, if you the super early leading indicators are that maybe this reversal is starting to happen, and maybe following the same pattern that we thought would play out here in kind of a run towards the end of the year, early into 2025, with kind of the bull market kind of finishing sometime around then. Obviously no price predictions, none of that stuff, but purely just the technicals kind of doing what they need to do, cooling off and kind of catching back up with time here. So
Ask you a follow-up question to the nature of the cycle in crypto. There are folks that when you go back and look at crypto and you go maybe all the way back to 10, 11 time frame and you fast forward 13, 14 years since then, how do you characterize the cycles? And do you see each time it seems like retail investors come into the space and then retail investors go out of the space, and it's like this tide, right? Comes in, comes out, but things change, and we see the space mature, if that's the right word. You see some of
sure.
the actors get flushed out. How do you, when you think about the cycles of crypto,
Mhm.
what are some of the two or three things that stick out from each cycle? Is it just pricing?
Mhm.
Is it new technology? I'm curious
Yeah, I
what
mean,
you think.
I think, on a pure, like, zoomed out 70,000-foot view, I mean, each cycle's kind of got a theme, right?
Yeah.
I believe this current cycle is tokenization. Certainly, the Bitcoin ETF is part of that. In some sense, the Bitcoin ETFs are a bit stabilizing too, right? Because you would you would want to hope that the investor that's buying that through an ETF and say a brokerage account or wherever it may be, or 401k for that matter, is more long-term thinking and is not going to be so in and out of the market as you suggested there early. Um, but you're right. I mean, the people that are in crypto in years cycles past, they come and they go. Interest comes and goes. But you kind of look at it, if you zoom way out and kind of look at crypto's entire history, it looks like a staircase, right? It goes up and then it comes back down, but it doesn't come down all the way where it started. So you kind of have all these shaped steps, but you definitely stepping up towards the upper right over time.
So the floor, if you will, of the prior cycle, typically you sort of break through that to get to another level. But when the next cycle is completed, it's a stair step above price wise.
Yeah,
where the last one ended.
Yeah, very generalized numbers here. You might look at it as, or think of it as, the market goes up, say, a couple 100% in the bull market, and then retracts 80-ish% as a whole. Wait a couple of years, rinse and repeat, and you kind of get that stair step effect going on.
Yeah.
But it's, to me, crypto is a patience game, but it is the strategy that I employ. We've got a friend in Philip that runs a crypto fund that, he can make money at any point, basically, with his strategy, if he's successful. And, he kind of almost doesn't even care what he's buying and selling. Doesn't care what the underlying asset is, what it's doing. He just needs there to be liquidity so he can get in and out of things. So very different look on the same market.
Right. Yeah. And some of the markets that, if you look at things like currencies, commodities, FX, just to pick a few, like these have been actively traded markets for decades, right? And if you think about trading and quantitative strategies and real active traded active management, high frequency type trading strategies, when applied to crypto, what is really interesting is, like you said, you see these portfolio managers, trading teams, they really are indifferent to, is it meme coins? Is it what's the underlying technology? Who's the team? Like, it really comes down to, is that trader able to exploit inefficiencies and find value? And maybe the cycle for that type of approach is a matter of days and weeks, not months and quarters and years. So
it's fascinating to kind of think through all that stuff. So
yeah, for sure.
Yeah. Well, thanks for joining us on this episode of the Weekly Crypto Check-In. If you want to stay updated on future episodes, you can find us in any podcast player by searching Teton Crypto Capital or the Weekly Crypto Check-In. Take care.
Take care.